This is the talk of Music City Real Estate.
Welcome back to another episode of the talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monty Moore with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and my mortgage team.
Every week, we'll be posting new episodes chock full of Nashville real estate value.
Yes, and you can also follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away. Questions at talkmusiccity.com. That's questions at talkmusiccity.com. And we have our supersonic guest with us, Carey Ann. So good to see you, and it's so good to see Jason, the Hoove Master.
How's it going?
Yes, welcome, Jason.
This is fun.
I love we are doing something unique this time.
Yeah.
I'm very much social distancing myself from the two of you.
This is true.
And we're learning all about how we can do this through technology. So welcome, Jason.
Thank you. Right. Great to be here again.
So we have an amazing sponsor this month on this show today. So Music City Removal is the #1 junk removal service in Nashville, from residential, commercial, and construction. They're experts in ridding you of junk. Their costs include labor and dumping fees without any hidden or added expenses. Whether you need a full clean out or just one item removed, they have you covered.
Music City Removal team knows the importance of respect and trust while in someone else's home. They understand the inconvenience of junk left behind by previous homeowners and tenants, and are determined to provide an affordable and customer-focused removal service that puts you first. For a free on-site estimate, go to musiccityremoval.com. That's musiccityremoval.com.
Music City Removal, because clutter ain't cute. Just me. I love it. Hey, so what are we talking about today on Talk of Music City?
Life goes on in spite of the challenges out there on the street and the quietness in our parking lot right now. You know, life's going on, and I'm so proud of you, Carey. And I got to start this whole show with a shout out to Carey Ann Cyr, supersonic mortgage professional. In spite of having a momentary challenge with shingles, she's still on task and still saving the day and still putting deals together. I love that about you. You're not moved by some simple not being able to see out one eye, are you?
Well, you know, I'm blessed that if it was going to happen, I woke up Friday with shingles back in my right eye, which meant that felt like my eyeball wanted to pop out of my head, and the headache was crazy bad. But
I wonder what that means.
It is a situation where we're just going to continue to move forward. We always say the show must go on, so there's a lot of people we can help by educating through this show. So I'm blessed to be here with you guys today, and wanted to make sure I social distance myself just in case. We don't want to get any, more sick while I'm trying to recover from this thing. What I learned is, in our industry, stress can take a toll, and if we don't recognize it and own it and use it for something good, we can quickly get sick. So I have decided to have a whole new outlook on this crazy time, and really wanting to channel it into something good. So I'm glad that we're here and we're not giving up on this great show that we put on every week.
Thank you for that, Carey Ann. I swear every time we get together, I learn something. And one thing I've learned from you is perseverance, not to be moved by the momentary challenges of life, but to keep on pressing forward.
Yeah. You and I did a class actually with Jason as well. I think last week. The times are all coming together, but about how this year can still be an amazing year for all of us. And not only maybe should we be able to meet our goals for 2020, but maybe potentially exceed those, and a big part of that is education and understanding exactly what we're having to work with. What opportunities do we have to actually sell within now? And so there's been a lot of mortgage changes recently, some for the good, that are helping us to create comfort and confidence throughout this unique and extraordinary time.
And that it is, I can't remember the last time I had a transaction die, less than weeks ahead of closing period because we live in such a transparent world that typically, even with the lenders that aren't on task, typically if there's a problem, everybody knows about it within at least a few weeks of the transaction coming together. Yesterday, in our office, we had somebody signing the documents. Everything was done. It was clear to close. Now, how you get clear to close and then say, whoops, sorry, there's changes. I know this is a crazy time. I get it. Things are moving all the time and so forth right now, trying to figure out how to get around this whole situation that our world is in at the moment. But it was heartbreaking to have to call my clients up this morning after they signed yesterday, only to find out that there is no buyer. The buyer has walked away. How does that happen?
Wow.
How does that happen
And
in today's world?
is that due to the financing, did you say?
Yes. They were doing a jumbo loan, and suddenly it was requiring more of documentation, is what the agent had told me, than what they were requiring some things that would have been picked up after the fact to be done before the fact. I didn't know anything had to be picked up after the fact. Is that am I being told the truth there in that situation?
Yeah. So what we used to do yesterday, it is a whole new world. I think the word that we're using a lot today in both of our industries is pivot, and how quickly can we pivot, and how quickly can we be informed with the changes, and how can we still maintain security through all of that. And so when it comes to the non-conforming type of loans and the jumbo types of loans, those investors a lot of them have put a halt or a pause on funding all of those. Like you said, there's people that have already been clear to close or locked in, and all of those financing options were yanked. Now, we at CMG Financial still offer a few jumbo opportunities. Again, the down payment requirements are a little bit more. The credit scores, it's a case-by-case scenario, and it is one that they're looking for the stronger buyer for that. Again, we've moved into a little bit more of a riskier time. Concerned, I was working with a client who is he's got a great job. He makes $180,000 a year. He's one of the top employees for a film producing company, and he lives in Nashville, but works out of New Mexico, and currently he was only given 3 weeks of pay, and they're no longer right now they're on a hold and will not receive any pay and he's in the middle of a contract as well right now. And so it's happening across the board, right? So we just have to take one day at a time and think 2 steps. So yes, there's some lenders that are maybe brokers. There's some lenders that are correspondent, and then there are some direct lenders. So depending upon what type of lender you're working with, they may have more control over one option versus another loan option.
So can you tell us what kind of lender you are other than a fabulous one? Are you a direct lender? How does yours work? Yeah,
absolutely. So I've worked with a lot. Actually, let me rephrase. I've only worked with 4 lenders in my entire whole career of 18 years. And one of them went under due to the 08 changes. But the reason why I chose CMG Financial and why I feel really confident within CMG Financial is they've been open since the 80s. They've survived all the ups and the downs. They're very liquid, and they are truly direct, which means we follow agency's guidelines. So we don't have somebody else telling us what the guideline requirements are. So lately, many people may have heard that, and this started happening, I think, on Saturday, and I was in and out of sleeping because of shingles, and I wish I had the energy to get out there on social media, because a lot of people were saying, FHA loans are going away, or THDA is no longer, you can't get 100% first-time homebuyer loan anymore, and the credit scores for FHA have changed, and right? Well, this is all changes per lender, and so a lot of the lenders that are making those changes are doing that because of their own personal overlays, or who they sell are now requiring a higher credit score for those. And there's some local lenders that we all know that are just putting a pause and a hold even on those THDA loans, and they feel as if those types of loans are a little bit more riskier, and it comes down to profitability as well. For those that know, when they put the government mandate out there for the forbearance and gives you and I the opportunity to request a forbearance plan if we have been affected at all by COVID-19, and that's due to illness, that's due to loss of job, or that's due to loss of hours. If we've been affected at all they're going to ask us is the question, and you answer yes or no. If the answer is yes, that I have been affected, you automatically get a 90-day forbearance. And so when that happens, the lenders still have to pay the servicers those mortgage payments. And so if you think about it, if it's just not one asking it now because of just a situation in their life, everybody's asking for it. The lender has so many more mortgage payments, which forces the lender to have to be very, very liquid to be able to cover all of those. So it may make more sense due to profitability for them just not to sell them currently and to get out. And so that's kind of what's happening right now. I'm not sure the reason so much for the increase of the credit score, except for maybe they're concerned that people with a credit score under a certain amount are more likely to request a forbearance. I'm thinking two steps ahead, as in the people that are asking for the forbearance are folks we already closed, right? Not so much the ones we are closing today. Maybe hopefully we'll be out of all of this in a few months. And then, the cost of FHA loans, for those that don't know, that's been a rumor out there. The cost to do an FHA loan is so much more. And the reason for that is because of them being a little bit more riskier. The value of an FHA loan has basically dropped dramatically. And what we used to get paid for service release premium out there, it's basically gone to zero. And so the lenders now have to charge something, and or what used to be an interest rate that didn't cost anything now costs a little bit of something depending upon that buyer's credit score. So again, the lower the score, and again, we allow down to a 580, there may be some closing costs a little heightened at the moment to be able to cover that cost for the buyer. The other day I looked at an interest rate for a buyer and it was 3.25% to 5.25%, right? And that cost the exact same across the board for that buyer, meaning it didn't matter what I charged them. There was no give or take because nobody was buying that loan at all out there. So that rate was the exact same. The cost was the exact same for that buyer. And it did cost over 2 points. And we met in the middle. The buyer paid 1 and we paid 1 to cover that for that particular buyer. But that's what we're dealing with right now. I think in the short term, we're going to see that the closing costs may no longer be 3% right now for a government type of buyer. Depending on the credit score, it may be closer to 4%. Or 4.5%. You remember those times back in the day? We're not going to age ourselves, Monty, but when we were doing loans back in the day, we used to have to charge one origination fee or one discount point, right? We kind of got away from that. And right now, we're kind of back into that because that's just for those buyers who really want to still be homeowners today that have a credit score that's a little lower. It's still allowed and it can still be achieved. There's a little more cost associated with that.
It wasn't that long ago that I remember, it was common to see a 1% or 1.5% or something on a closing statement. But we've gotten spoiled, just like we have with the interest rate being, so much lower than ever before. We've gotten spoiled, and everybody thinks that's the norm, and it's not.
Right.
So all kinds of changes happening.
Yeah, and changing, the cultural changes. I think a big part, with our audience being a lot of real estate agents, if we all have to work together to work towards changing that culture, where it used to be everybody was coming in on 2 wheels, get them excited about finding a house, and then we'll worry about the financing later. That's just how it was. And we were, worrying about getting all that taken care of as quickly as possible. This is the time to change that culture, get the financing squared away, get that true approval, and then, have them find a house. Because the hardest thing to find is that, the financing can't be done because people didn't know of a guideline change or didn't know that this program no longer exists, or finally just realizing it exists and now it's been taken away, So it's making sure that maybe we all work together to change that and get people to start with the first step in the process, which is approving or applying for a new home mortgage.
We teach that here, don't we, Jason? That you got to get approved first.
100%. Every single time. And I've got a question, if you don't mind.
No, please.
Sure.
So in what you're sharing there's a lot of different things happening, and it's a lot to navigate. And it is a different time that we're living in immediately. So things have completely changed. As a buyer's agent, Is there any tips that you would share for the buyer's agent that talking and educating their buyers when looking at homes at the moment, has anything changed that you can say, okay, well, this is what's different now, and we need to, approach it this way? Is there any tips that you could share?
Mm-hmm. Yeah, that's a great question. I think step one, if you have a client that was already pre-approved, it's important to re-look at that pre-approval, confirm that the lender can still honor that pre-approval.
Okay.
Because like we said earlier, there's some lenders that are no longer doing THDA loans. There's some loans that approve through our automated system, whether it's CMG Financial or another lender. But now that lender now has an overlay that doesn't allow for that 620. Let's say their credit score now is a 640 or 680 on an FHA loan. So that particular buyer would have to boost their credit score to meet that lender's guidelines, or they would have to find another location to be able to get financing. And just the past couple of days, we've been jumping in and taking a lot of loans that were once pre-approved from another lender, and moved over. So I would double check everything on that. Also, I would confirm that they've already discussed their interest rate, just because rates, we've been saying, we've been on the Disney, closed down, but I'm still left on the roller coaster ride. I haven't gotten off yet because the market has been all over the place. And now because the service release has gone to zero, basically on FHA loans, that cost of FHA loans have now changed, right? And so what does that mean for your buyer? Is the lender just going to cover that? Some lenders may have that opportunity and some may not. So I do think really reviewing everything to confirm that pre-approval letter is still going to be honored, even within the last 2 weeks, I think is important for any agent to do and double check themselves, because you would hate for any hearts to be broken if you put an offer in and you can't honor that.
Yeah, that's good information. What about if they're already under contract? Is there anything that they need to be doing?
Yeah, so it was interesting. I thought quickly because I didn't know if everything was going to change or it was just lender specific. So I was trying to think 2 steps ahead. So I got everything, all my FHA loans, all the case numbers pulled just in case, and it had nothing to do with that. And so that's really what's important. It does not matter if you're contracted, just like what Monte experienced. Okay. He was at the closing table and it got yanked, right? And so those times, if you haven't lived through those, we experienced those a lot way back in the day, and it's really important to have a plan A and a plan B today. Also note that one of the big changes is verifying employment 5 days prior to closing now. It used to be 10 days. People, depending on if you fall within the essential business or the essential business, the lender has the ability within 5 days to double check if you're still employed. And sadly, many of those calls have led to finding out that some people don't have their jobs currently, or they have been temporarily laid off. I had a client who was a bartender. They changed and pivoted, which I love to see how creative so many industries are doing. So he was able to maintain one of his jobs, but not the other. And he wasn't able to do loan over $300 a month. Like, there was no opportunity to make that work over $300 a month with that side job that he had. And so he wasn't able to move forward with that particular loan. So that's happening right now. And with the governor recently, over the last week, coming out stating that, the non-essential businesses have to close, there's some people that just had to close up shop and just wait it out. So that, does change jobs at the moment.
Wow.
So sad.
Wow. Yeah, you can't buy much of a house for $300 a month, unfortunately. So one question I had, when you hear some of these companies saying we're no longer doing jumbo loans or we're no longer doing whatever kind of loan, does that mean just on hold, or is that, or just we just don't know? It could just be forever. I mean, it seems unlikely that these big online companies, and this is what I'm referring to, they don't do any more jumbo loans. That has got to be just for a moment, right? Or not? Or they just don't know?
I mean, like I said, there's a couple options that we have to do jumbo loans. It's just the certain investors that maybe that lender was selling to, they don't have the ability they don't have a loan option currently. Mm-hmm. That particular servicer or investor has just decided to no longer lend. And that's kind of what happened with those non-conforming. There's probably a handful of non-conforming products out there. Those would be your bank statement loans, your no-doc loans. I've just recently did a foreign national type of loan, all of those unique type of loans. which were very unique and helped many families gain home ownership over the last so many years. All of a sudden, literally right when this started happening, they were the first to suspend all production and all fundings at the time. So until those guys come back, there's nobody to sell or even get that type of loan through. When it comes to THDA and why lenders are not doing that, there's very minimal money and profitability on a THDA loan. We are still honoring that if THDA is still moving forward. And we got notified over the last week as well that they are excited to help all of the first-time home buyers, and they're going to continue to move forward. And they're actually even honoring all of FHA's recent changes. And one of those big changes you guys may have heard, which is creating and helping with safety and creating comfort, not only for our buyers, our sellers, and also our appraisers, is Fannie, Freddie, and Ginnie with FHA are allowing drive-by appraisals now. And so that's a big win for a lot of people for speed. It's able to get those appraisals back a little bit faster. The costs are a little bit lower. So that's helping folks, and THDA is honoring that. But one thing that surprised me, and being in the industry for so long, Monty, you would think the same way. FHA has been a government loan, always protecting the buyer, looking for health and safety. And one of those things is doing a certified appraisal, which they go in and check for health and safety issues with the home. A drive-by, all they're doing is driving by and seeing if they see anything wrong with the house from afar. So right now, there's no repair requirements unless they see something as they're driving by. They're not going.
What's the likelihood of that? You know, they're not going to see peeling paint from the street, probably, or whatever. You know, that just seems so unlikely for FHA because they've been so tight on the appraisal part of it. I don't know how does anybody really? I mean, anyhow, it's a strange time. I know. I just don't understand how they can do drive-bys. You know, way back in the day, there was drive-bys, but there was a lot of sloppiness too created in that environment, and that's not what we want to see happen now. We want to see real values conveyed. But
I mean, again, the appraiser's not going to know that they're not going to see that kitchen has this upgrade, or they're not going to see the quality of that house anymore. They're just seeing it from the street, and so they're really doing their due diligence, on what you've posted, and what you've communicated through your systems, and they're going to be looking for comparables, that way. But it is interesting. It is just a temporary situation right now, and that could change. We don't know how long, but that is something that THDA is going to allow for us to move forward with as well. Also know that if we cannot get somebody on the telephone because people are working from home and they didn't transfer the phone numbers and things, the lenders are now able to get on a conventional loan an email from their supervisor. And if we can't get an email, we're able to use the most recent pay stub to show proof that they're still employed. On FHA, it's a little bit different. They're requiring, if we cannot get somebody on the telephone to verify employment, they're requiring the most recent pay stub and 2 months reserves. And so that's something that's big too. You would think and you would hope that people would close with some money in the bank for that rainy day. And many folks that you and I help, sometimes are just putting all their pennies together to gain home ownership. So right now we want to always set everybody up for success, and looking to make sure that they have those 2 months reserves is probably a good thing right now with everything that's going on.
Wow. Well, again, Carey Ann, thank you for being who you are in this business and helping so many families. And if there was ever a reason why you want to use the number one mortgage professional in the state, I think right now is that time and is that reason. Wouldn't you agree?
Agreed.
I mean, it wasn't too awful long ago. One of the agents I was talking to said, "Well, I use Carey Ann as a backup because I try this. I use this guy unless he can't do it, and then I go to Carey Ann because she always can." And I said, "Why would you jeopardize your reputation with your client? Why would you not ensure that they've got the best of the best right out of the box? Why would you take that chance, not only for your reputation, but for your client's ease of life?" So it wasn't long that I think he changed his opinion and started putting everything with you. It only makes sense, Carey Ann. I mean, there's no, it's hard as it is, and you're not a miracle worker, but boy, you're next best thing, it seems like to me in my world.
Oh, Well, I think the things that we talk about right now is sharpening our tools and being really educated. Right now it's the time to understand our guidelines inside and out. And so as soon as something changes and turns, we're able to think about another option. And surrounding ourselves with amazing people is really important, and professionals that have the same beliefs is so key. And so my team, we've been together a really long time. We find ways to create solutions. I think that's really the importance of what we're looking for. And in our industry, that's all we do, right? We create solutions for a problem that a buyer or a seller may have. And we need to do it quickly. And that's kind of leading up to turn times, right? So we're hearing, how long does it take now to close on a house? 45 days, 60 days, 90 days is what I'm hearing. And I'm like, whoa. Goodness, that's a long time. But we're still closing everything in our normal turn times unless a third party goes MIA. And I say that because some have gone MIA, as in, some people heard the news and froze, and, we weren't able to find appraisers, and people weren't responsive and things. And
when you say third party, you're talking about appraisers, or what other third parties are you referring to?
Yeah. So, it takes a village. You and I both know to close on a house, right? So that's going to be appraisers, title company, insurance agents, things. Okay. As we transition to many of them working from home, response times have sometimes been a little delayed. As people transition into their new world, their new normal, maybe not working at an office or working in an environment that they're used to. And so we've had to work with that. But our turn times are still the same. So if you hear that something is extended because, that could possibly just be that particular, lender. And so if you are in a situation that needs to close timely, again, we're here to help you with that. The last thing I would bring up, and we're hearing this a lot, is, safety not only for our buyers and sellers, but also for all the business professionals that are working on the loan and or the transaction. So that would be the title company, the inspector, the appraiser, the real estate agent, lender, et cetera. We've just recently gone virtual. So I've worked out a process from start to finish that everything can be done from a cell phone, which is really great. And at the end, depending on if they go conventional or FHA, we may have to have a notary go to them, but everything really can be done from the convenience of their house, which is really nice. And that creates safety. So the closing part has been a big overhaul, because we're so used to having a huge celebration at the end and all of us getting together and cheering and hugging and high-fiving, through that process, and working on signatures and having a notary, close everything. And so moving towards getting e-closings not only approved and getting new software developed or added to the lenders is been a big feat. Not every lender is doing it yet. I'm excited that we quickly started thinking 2 steps and innovated. Not only we did a 5-document drive-by closing really fast. We were able to get that approved because some of the agencies weren't allowing a full, true e-closing. And now we found out that Fannie and Freddie allow for that. And so we had to adopt new software to allow for that. So we've been rolling that out over the last week or so. So excited about that true e-closing process now for a lot of your buyers.
And that's one of the good things, I guess, Jason, that's coming out of this whole situation in Carey Ann, that we're having to watch and try to be as good about it as possible. Our industry evolving, just like what you just described. You're being forced out of the box, the old way of doing it. And I just really, again, applaud you, Carey Ann, for being so quick to pivot. That word pivot is so relevant in today's world.
Yeah, and I'm glad she brought that up, because whenever I was seeing that and hearing her talk about it, and even your social media posts, it's brilliant, absolutely brilliant, and I'm excited about that. And I just want to touch on one thing, too, about having a strong lender. A lender is part of your overall team.
Absolutely.
And right now, it is even more crucial to have a very strong team, because the stronger teams will win in the end, right? And that's why it's so important that you have people that you trust and that are going the extra distance and the miles for you and your clients. And in case in point, like with Carey Ann and her team, is they took the situation and they said, what can we do different? How can we make this situation better? And adapted, but didn't just adapt, but adapted quickly to it. And that, I'm blown away, Carey Ann, and I applaud you for that. And that's one of the reasons that we love you so much.
Oh, well, thank you. Thank you. You know, the hardest part in any field, to us, it's easy. Like, I'm okay going here or there, but maybe the client's not. And so we have to put ourselves in their shoes, right? What creates comfort for them to make one of the biggest decisions, you know, which is purchasing a new house, right? And so creating that comfort is so important. I heard this quote the other day, which I thought was really cool. Sometimes things fall apart so better things can fall together. Sometimes things fall apart so better things can fall together. And that's so true right now. You know, it takes something so big and so, you know, heightened for us to make major changes that maybe wouldn't have come another year from now, you know, type of thing. So there's a lot of good that's coming out of such a bad and frustrating and overwhelming and emotional situation. But I do feel we're going to be a lot stronger and better as we navigate through this time.
I agree.
Absolutely, which hopefully will be sooner than later. That's my prediction. Sooner than later, whatever that looks like. I second that. Let's get back to work. Anyhow, thank you, Carey Ann.
I know, right?
It's been very enlightening, as always. We love you. We honor you. We bless you. We're so grateful for you. And hopefully you'll be feeling better before too awfully long and get that ugly old, that nasty old, whatchamacallit, away from you. Connie, went through that about 5 years ago or something like that. So she has a tremendous respect.
That makes me sound so great there, Monty. That nasty, ugly. I was like, if nobody heard the rest of the story, I'm like,
he has a way with words.
Telling stories about me.
No,
I love it.
You're such an overcomer. But that's my point. You're such an overcomer. Thank you for being you.
Well, together we can help so many, and I think that's really what we're able to do as real estate professionals here. You know, we may not be selling them a house right now, but we can be a huge supporter to all of the clientele that's out there, and really help support them through this, because they will be ready to buy a house, whether it is now or tomorrow. So
that's right.
Having a good team is important for sure.
Awesome. Good show. We appreciate you being on here with us, regardless of what's going on in your life. And I was only describing what that nasty. What's it called again? I forget what it's called.
Oh my goodness! Here you go again. Yes, I love
shingles.
I love it. I do have shingles. We're getting it over. Yes.
Man, avoid shingles. Whatever you can do, avoid shingles.
Lord, which comes from stress. So we are channeling the stress into something good now. We're owning it, we're acknowledging it, and we're using it for something good. So thank you all for listening to today's episode. For more episodes, join us at talkmusiccity.com, and we'll see you next week.